Welcome back to BestProp4U. The Euro USD is climbing today, driven by a combination of dollar weakness and euro strength. On the US side, dollar declined. Hopes for a Middle East ceasefire between Israel and Lebanon have actually increased or improved. Furthermore, the US House just passed a resolution to block President Trump from continuing military action against Iran. So even with these geopolitical shifts, US inflation concerns persist. Okay, and the resilient labor market has investors pricing a potential Fed rate hike by October. So all eyes are now on tomorrow's critical NFP report. On the European side, however, the euro is pushing higher as markets pricing a near certain 25 basis point rate hike from the ECB, which is next week. Euro area inflation also hit 2.5-year high, and core and services inflation also accelerated. So the ECB is actually hawkish. So let's look at the chart to see how this fundamental battle is playing out currently and what could happen next. Looking, of course, always at the daily chart, we're looking at the 116 level becoming actually support. Okay, so the 116 handle has helped prices push towards the 116.45 level, but of course we did fail to move all the way up to the median band at 116.66. As well as, well, it's going to play a role by the end of the day if we close above the 116.31 close open, or not. This is an important catalyst to keep an eye on. So despite though the fundamental push, the technicals lean bearish, and it's very obvious. We are trading below the median line, okay, having rejected the initial move to the upside at 116.86, which becomes a critical resistance level above the median Bollinger Band. So if we fail to cross that recent swing high, the likelihood of further downside is going to be quite high, unless, of course, the 115.75 or so level holds to form a double bottom. Dropping, of course, as always. Actually, before we drop, let's just pull out our levels. You've got that on the top and that one on the bottom, in between the median band, which of course it's extended resistance or support that we're looking at. And we do see these levels, of course, create some sort of on the 4-hour, some sort of consolidation, right? However, and despite we're seeing some flatness with an expanded sort of volatility in the bands, structurally, this current consolidation looks more like a flag pattern. Okay, now flags obviously typically continue with the direction of the trend. If the direction of the trend was to the downside, then this could be suggesting that we might see an equal leg to the downside, equal in length, right, from the breakout point, which actually currently sits around 116. Now, we have to take into consideration how much we have gone up and what this potentially means. So if you see, we went all the way up from the low down at 115.75 or whatever at 116.87, which actually happens to be the 50 Fibonacci retracement and our previous peak. So sentiment also remains bearish on the 4-hour chart. Now, we also failed to maintain 38.2 and 23.6. We came all the way down to just below 116 to retest that support. For now, this could simply be a bounce at the psychological support. So it is important that we manage to stay above 116.28 and reclaim 116.60, the 13.2, as well as the upper Bollinger Band, and of course the 116.87 level, which is the 50 Fibonacci. Only then can we consider this as a potential even now double bottom, with of course a weak attempt to reach the previous trough. So the 61.8 would be something that we could start considering flipping sentiment for a move all the way up to around 118. And down on the 1-hour chart, of course, what we do see here, the recent price action looks like a potential, you've got a third wave extension first of all, because you've got the 1 and the 2, and the third wave is over 200% increase, okay, which is important because typically the third wave extends as high at 1618. We would already have an impulse But anything above 1618 is considered potentially a wave 3. That's why it is important that we measure that last move to the upside. Okay, and we see how much correction we have done so far, and we came down to the 50% at 116.22. So it is very important that we keep above the 50. Okay, if we do, we could be looking at a fourth wave correction here. So we'll have something like 1, 2, 3, 4, and 5. Why am I showing you this? Because after reaching overbought, essentially what this could mean is that we could see another move to the upside towards 116.50 or so. However, if it comes with low momentum, we could essentially see here a divergence. Okay, let's just place this a little bit lower down. And then a pullback. This would imply a pullback and further continuation to the upside. Okay, because we wouldn't just have a continuation all the way up to 116.87 just like that, unless if something, a very bullish or hawkish catalyst actually support that thesis. So as long as we hold above the previous swing high at 116.15, which is the wave 1 peak, okay, then this could still be a wave 4 correction. However, the 1 hour RSI went into deep overbought territory. So if price extends slightly higher, but the RSI doesn't follow, that would be the bearish divergence at the top of a 5-wave move, implying a quick rejection. Actually at the previous high at 116.50 or so, a quick rejection here. So the trade plan, if price holds above the 50 Fibonacci retracement at 116.22, was that 116.22? Check one more time. 116.22, correct. We could see a short-term push higher. Let it push, watch for the divergence to play out near 116.50, and wait for a clear 5-wave pullback before looking for any serious long entries. Actually, it wouldn't be a 5-wave pullback. It would most probably be a 3-wave pullback. So trade safe and watch out for tomorrow's NFP data.